This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Welcome back, of course, to the Research Talks here from Stockbox with Alan Green. How are you going, Alan? How's it been?
Hi, Mark. Yes, it's been a funny start to the year, but yeah, my portfolio has actually had a reasonably good start, so I'm quite pleased about that, which is
that
always
is good.
Encouraging.
Yes,
Yeah.
that is good. Yeah, because again, we're constantly seeing placings struggling to get away, particularly this week here, and of course, discounted placings. But then again, you've got, of course, Bitcoin back over 100,000. You've got Trump coming in on Monday, and I think that'll put the risk on a few things. So. Yeah, I'm glad to hear your portfolio. Is it a mix? Would you say? I mean, is it? Would you say the miners are not performing as well as perhaps other stocks you have, or what's the general feeling you're getting from your portfolio performers?
Well, I think the poor miners have just become so embattled that their share prices. I mean, we've had some movement, and obviously, Guardian Metal Resources, Freudian slip there. Guardian Metal Resources had a really good start of the year, so we've exercised warrants there. But on the more general front, I'm in FTSE 100 stocks. Some of the big dividend payers, they've kind of delivered well. The tobacco companies, I'm still in BATS and still in Imperial Group. Also in a really good fund, the Fidelity Global Technology Fund, which I've been in a few years, and that just keeps on growing. So good start to the year there. And of course, there was the rumored Glencore and Rio takeover, which didn't happen, and Rio shares jumped back up again. So yeah, it's been a goodish start. So I'm not sort of going to get too excited, but if it continues this way, then I hope to see a stronger recovery as the year progresses.
Yeah, okay. No, that makes sense to me because we did see a bit of a pullback towards year end, so I think it was a well needed sort of healthy correction on the main indices there. So hopefully it can sort of carry on, and we have a good sort of run at it. Because certainly a lot of people feel it and need it. I think.
I think there's some historical data that shows that if the FTSE 100 and the markets end January higher than they started, then invariably the outcome for the year is always good. So that's a real generalization, I know, but there is some data that backs me up on that. So yeah, I'm hopeful that we can have a strong January, and that will set the stall out well for the rest of the year. I mean, frankly, it can't get much worse, can it?
Well, it can't get much worse in the miners. I said this to someone else. I've never seen it so bad. And I mean, I've not been doing it as long as you, probably just over 10 years. But I've never seen discounted placings like this ever. And it's so that's pretty bad. And interesting, you mentioned there that sort of statistic about January. Of course, as well, the Dow Jones 10-year cycle, which dates back to the 1800s. There, we're basically halfway through the current 10-year Dow Jones cycle, year 5. This is year 5 now, and it's the most bullish year in that 10-year cycle, and it continues to be bullish with a little bit of up and down up until year 10. So again, whether history repeats or history rhymes, we don't know, but the Dow Jones 10-year has, I think, been pretty much on point going back since the late 1800s there. So yeah, and as I said before, I mean, that would put us in a good point, actually. So the US president's term is, 4 years? So that would sort of put us to the end of the term. And regardless of what you think of Trump, he's not going to want the United States to look bad or, people to feel pain, is he? So he might
he's not.
Yeah.
And I think if the US markets perform well, and which I think they will do under Trump, then
the rest of the world
lead over to our market, to European markets, to Asian markets will be positive too. So it's going to be a positive thing.
Exactly.
Yeah. So I mean, obviously there's the minutiae in there as well. Will Trump take over Greenland, which is a subject for debate. But I'm sure all the Greenland mining companies would have something to say about that. But anyway, it's going to be a very interesting year.
Oh, for sure it will, for sure. Anyway, so let's crack on.
Yeah.
Talking about rising, let's talk about helium. Let's talk about Georgina Energy, and let's talk
So
about Mendell Helium. So Georgina
indeed,
Energy
so
first, Alan.
so this is a bit of a helium special, and of course,
Mm.
you know, helium is it's you can't reproduce it synthetically. So sources of helium are highly valued, and it has a multitude of applications, both you know, space travel, medical, defense. There's a whole realm of and range of applications for helium. And indeed, Bose is the chief executive of Helix Exploration, published a book a few years ago, Helium, the Disappearing Element. And it is disappearing, but it's available in some places. And of course, these two companies we're going to talk about now are sitting on top of potentially giant helium resources. So, Georgina Energy, of course, finally came to market last year. Trading currently at 5p. It's off its year high of 19p, just off its year low, in fact, at 4.5p. So does represent a great opportunity, and of course has exposure to assets in Australia. It owns a 100% working interest in the Hussar project. That's exploration asset 0186, which has recoverables of 155 billion cubic feet of helium and 173 billion cubic feet of hydrogen, worth some 55 billion Australian dollars, and also natural gas there, also worth some $5 billion also. It also has owns 75% work interest in the Mount Winter project, with the potential to increase that to 90%, recoverables there of 148 billion cubic feet of helium, 135 billion cubic feet of hydrogen, and also 122 trillion cubic feet of hydrocarbons, which of course is natural gas again. So the combined potential assets controlled by Georgina, 344 billion cubic feet of helium, 353 billion cubic feet of hydrogen, and 3.25 trillion cubic feet of natural gas. And the story really since they came to market, of course, with any projects of this scale, it's about permits, and it's also you're working with the indigenous population, the Aboriginal population. So there are a series of steps the company has to go through to obtain the licenses, and certainly with the Hussar resource that has progressed throughout October. In November, the company was notified that the CSS Alpha Fund had taken a major shareholding in the company, 7.7%, and that's always good for an exploration company when you obtain institutional backing. And in December, the company conducted a site inspection of the Hussar asset. Confirmed the access roads and airstrip were good water access. They noted they had completed the heritage and monitoring study, and at that juncture, the re-entry process to the Hussar well was expected to take some 50 days. And Tony Hamilton, chief executive, said at that point, you know, that they were on track to re-enter the Hussar well, and also to bring Mount Winter to pre-drill status. And during December, of course, they also submitted a revised exploration permit for the Mount Winter asset. And once that is granted, Georgina will pay the owner operator Oilco $15,000 and will meet its other obligations in regard to the farming agreement. Georgina then provided an operational update a week or so ago, and stated that as announced earlier, they had amended the environmental impact report, due to the fact that the Hussar asset had expanded, or the closure structure had expanded, and they had submitted that to the Department of Energy, Mines, Industry Regulation and Safety of Western Australia. The acronym is DEMIRS for short. And on the back of that, a revised scoping study is expected to complete in a few weeks, and the company are also negotiating farming agreements here. So this is a huge asset. There's a tremendous amount of acreage, and there's a tremendous amount of gas in the ground. As I said, 300 combined across Mount Winter and Hussar, 344 billion cubic feet of helium, plus similar amount of hydrogen, and of course the natural gas assets as well. And this is almost a plug and play solution. There is a well in the ground already, but of course it has been dormant for some time, so they had to go through this process of re-entering and applying for the necessary permits. So lots of news to come from Georgina. I think the share price at the moment currently reflects the delay in that process, but I fully expect to see further progress during February. We'll hear from Tony Hamilton and the team, no doubts, and of course we'll be seeing interviews from you, Mark, with Tony as we go forward. So yeah, everything to play for, and I think offers great value, with a valuation now of just under 5 million sterling. So it's a really cheap stock.
I'm sure I will be talking to Tony. It's been a little while since we did catch up, and I know they were wanting to re-enter the well, like sort of now, really, but it's been delayed because of this environmental extra work they've got to do. So that's due to complete. What did you say? Sort of end of February, was it? Was that the scoping study?
That's the revised scoping study. End of February. Well, yeah, end of February. So yeah, that's about 4 or 5 weeks away. Yeah, yeah.
Yeah, okay, and then they can hopefully do that re-entering at that point then, because that's the big milestone. Obviously, they need to get to their re-enter that well and test the flows, etc., and then move on from there.
And of course, with that site, in December they established the access roads are good. So obviously there's the practical element. Okay, you get the stuff out of the ground, it's stored there, it's then taken to market, and there are the considerations of actually bringing the gas to market and of course selling it, and that's how this company's going to earn money. So yeah.
Indeed. Okay, excellent. Thank you, Alan. So we can certainly keep an eye out, certainly Q1 for Georgina Energy there, and developments on that front. Mendell Helium then over in the United States, the other side of the world.
Indeed. This is a very exciting project, and I think it's exciting just through the scale, but also because of the infrastructure that's in place. So a bit of history, of course, is Mendell's an Aquis listed company. MDH is the EPIC code, currently trading at 3p, which gives the company a market cap of just 1.3 million, which is astonishing, really. When you consider Georgina is valued at just under 5 million. So there's a massive amount of upside on offer here. But of course, it's possibly as a result of the legacy of the company. Of course, it's run by Nick Tulloch, who we know well from ECR. Nick, of course, is the chief executive here, and he's also involved with M3 Helium. Last year, the company announced that it would be acquiring M3 Helium through issuing shares, which would represent 57% of the large share capital, and it would at the same time be disposing of its CBD and cannabis product manufacturing facility in Perth and its wholesale operations and stores around Scotland. The company raised 864,000 through a subscription at 3p. Nick Tulloch and also Chairman Eric Boyle invested 25,000 each personally. And on the back of what is a hugely exciting asset in Kansas, there are 6 wells. The Hugoton Field, which has 1,000 possible wells, has already produced 27 trillion cubic feet of helium-bearing gas. In place already. There's a commercial agreement or commercial processing agreement with Scout Energy at the Jayhawk processing plant, and it's literally a plug and play solution, because the other fields or producing fields in the region are piping straight into the Jayhawk processing plant, and of course then they earn their commission. The Jayhawk plant takes its fee, and out it goes to market. So the company announced in October that it would be disposing of its plant-based wellness business to Ortus Therapeutics. On the back of that, Mendell Helium still will own 28% of Autos, and it will receive further upside conditional on the company hitting revenue targets. Then in November, the company announced it had signed an exclusive farming agreement with Scout Energy, over 161,200 acres of Hugoton, which is one of the largest natural gas fields in America. This is for a minimum of 25 new wells. All production would go through Jayhawk, but it's a fixed price contract. And this came at a time where I think the price of helium had peaked. Indeed, Nick and his management team attended a conference in Houston shortly before that, and I think the general prognosis from the presentations there at the event was that the price of helium had peaked and would be dropping off slightly. So to secure a forward fixed price contract is a very good move. Gives the company great visibility on revenues and everything else to do with that. They'd also agreed discounted royalties and operating expenses. Scout Energy also waived gathering and processing tariffs, and also had first. Also, Mendell was given through this, or M3 Helium was given first right of refusal through any other farm outs across Scout's Kansas acreage. And this is, I think it's really kind of cornerstoned the entire Mendell Helium investment proposition with a deal like this in place. And then what has happened since then has just solidified that and really added, I think, some real blue sky potential. The company announced it's also in November it acquired a further 3 wells in East Hugoton. 2 are in production. The third is suitable for water disposal. Of course, when you frack these wells and extract the gas, then it produces water too, and that water's got to go somewhere. So some of these dormant wells are then used to store water, so the water goes back in there. At the same time that the Voyager disposal was completed to Autos, so I've already covered that. But the Nielsen well, which is one of the wells owned by the group, was showing some very exciting developments and growth. So in December, the production passed 100 million cubic feet per day, and the company noted that it continued to rise by an average of 2 million cubic feet per day. The data from Scout Energy and, of course, its Jayhawk processing plant confirmed that Nielsen was in the top 1% of producing wells by volume in Kansas, which is pretty significant. I mean, that's it's a vast area, a lot of wells in production, but for Nielsen to be in the top 1% and to be growing is quite something else. The Nielsen well is a key part of the strategy of Mendell in developing the field, and in particular a zone that the company calls the Towanda zone. And this is a zone which consists of dolomite with shale breaks, and it's one of 5 formations across the Hugoton field that is operated by M3 and Mendell Helium, and the performance of Nielsen, in a sense, has served to prove the viability of this Towanda zone and developing the Towanda zone. And as Nick said, with this when this was announced, the success of Nielsen really provides a blueprint for the strategy for Mendell Helium in taking this forward. Then there was another update at the end of December that that production from Nielsen had continued to grow up to 127 million cubic feet per day, and on the back of this, obviously, a lot of contractors and other companies were sitting up and taking notice. A lot of funding interest from local oil and gas companies. Fracking contractors were offering and have offered M3 Helium Mendell deferred payment terms. Also, which of course makes it very easy to get to further explore and further tap into that Towanda zone. then there's a further well out near to Fort Dodge called the Ross well, which also has demonstrated great potential since next time with the company, and the well is examined for production, and it's believed at this stage that the Roswell production has the potential to cover the overheads of M3 helium and Mendell helium, which is hugely significant. Now, of course, the entire transaction has to complete, and that's been put back, I think, because the M3 helium business is evolving at such a rate that what we started out with has turned into something much bigger. So that deal is evolving, but of course, at the outset, a convertible loan was provided to M3 Helium by the old Voyager Life Mendell Helium. So it's going to be very interesting to see how this pans out. But interesting to see that the share price is trading at the level at which the £864,000 was raised. So it's still there. So if you invested in at this level, you'd be aligned completely with the other shareholders. And frankly, the upside here is absolutely enormous, because once the deal is completed, we then go into production, and the Nielsen well will be producing helium, and it'll be pumped out to the Jayhawk processing plant and sent to market that way. So both for Georgina, and I think particularly Mendell, with the sheer scale of the asset over there, we're set for a huge year.
Yes, indeed. As you say, turning around that company from the cannabis through to the helium, the cannabis products, the topical products, to the helium products last year has really transformed, I think, the offer that Mendell have now. And all credit to Nick, really, for going out and doing what he's done, doing those deals with the guys over there in Kansas. And as you say, top 1% in the world, wasn't it? I mean, it is incredible, really, for a small company on Aquis even to have that sort of asset on their books, to have first right of refusal on this field effectively, and get pumping straight into Jayhawk. So yeah, I think he's done very well.
I think if you ever wanted an example of a disconnect, the market's disconnection with actual value within companies, you look at the share price of Mendell Helium, and you've got a valuation of 1.3 million. I mean, there's this company now owns 28% of Orsus Therapeutics, which owns all of the old Voyager products and the business. So there's revenue still being generated there. The company participates in any upside from that business too. But then we've got this huge, relatively huge helium business, which is set to explode. Well, let's hope it doesn't literally explode, but it's got the potential to grow rapidly. And just on the basis of what Nielsen has done over the past few months alone, that the production has gone up to 100 million cubic feet per day over the past month to 127 million cubic feet per day, and it's probably even higher now, given the rate of growth that we're seeing. So yeah, hugely exciting, and I think once this deal is completed, it's going to be absolutely transformational in value for Mendell Helium PLC.
Indeed. Well, thank you very much, Alan, as always. Do have a pleasant weekend, and we'll speak next week.
Thank you, Mark. You too.
Well, Dan Flynn, of course, is joining us again for the Research Talks podcast. Dan, it's good to be catching up again. I know you mentioned last time, just before we finished, about Vinanz. Of course, they got that listing away on the London Stock Exchange on the Monday, so they're now main board listed. So yeah, we're going to talk about that, and that's quite timely as well, because of course Trump is in office a week. No, not even a week. It's next week. It's Monday. Yeah, he'll be in office on Monday. And of what I've read, I think there's a lot of executive orders standing by, particularly in the crypto space.
Yeah, that seems to be the case. That's the chatter in the market at the moment. We'll see how that affects Bitcoin and crypto prices next week.
Yeah, we will. But it does sound fairly bullish, really. And of course, the crypto is holding up fairly well, back above over 100 as we're recording today. So we'll have to see. But I'm quite sort of excited about what the Trump administration is going to bring generally, I think, for sentiment globally in the market. So yeah, it should be an exciting week anyway.
Definitely. Yeah, we'll see a lot of what Trump's promised a lot, and we're going to see what he's actually planning on delivering, really, aren't we, from next
Indeed.
week onwards? So
Indeed.
yeah,
Indeed.
yeah.
So Binance then, give us the case, give us the take.
Yeah, absolutely. So the company moved, like you say, from Aquis to the main market on Monday, and it's already generating a fair amount of chatter. So if you're not familiar with Vinanz, it's a Bitcoin miner. However, rather than owning its own infrastructure, which tends to be the primary cost associated with Bitcoin mining, it operates through third-party data centers in regions, particular where energy is reliable and cheap. So this means rather than having to pay the increasingly hefty admin and property costs associated with running, a larger fleet of machines, these data centers install, maintain, and operate the miners on Binance's behalf for a fixed fee, and then they give the mined Bitcoin straight back to the company. So these lower overheads mean the company pockets as much profit as possible from mining. At a price of 95K, the company said in its latest release, the operating margins on its machines in Nebraska are 30.9% and 43.3% in Texas. I'm no expert, but I did a bit of digging around, and that seems to be pretty good for the sector. And as you probably clock, Mark, that's quite a good model for scaling up. So the company takes the profits from the Bitcoin it mines and it uses it to purchase more miners, which it deploys across a growing range of territories in North America with various third-party providers to reduce the risk of being overexposed to one and, the power going out or something like that. So it seems to be working. So from 20 miners in Nebraska in 2023, when it first listed, in its prospectus, I saw that Vinanz said it had 548 miners live across Indiana, Iowa, and Texas in the US and Labrador in Canada. And the company has no plan to slowing this, obviously. So after listing this week, the company's already announced that it's using part of the proceeds of the 1.5 million it raised as it shifted to the main market to take its Nebraska fleet of miners to 100 and to add to its Texas fleet. And, with that money in the bank, it seems likely that more miners will be on the way.
So what do you think the sort of main sort of investment case is for a company like Vinanz then, for people considering wanting exposure to crypto?
Yeah, so without question, Vinanz is a investment for those who believe in Bitcoin's long-term viability. So criticism leveled at the company today is focused on its valuation. So it's estimated that the company has around 25 Bitcoin in its treasury. There's no exact figure out, but let's just take that it's around that as read. And a Bitcoin price of 100K, which is where it's sitting at the moment, it was when I last checked, that has a value of around $2.5 million. Binance's market cap, as of when I was researching, was £50.2 million. So even when you add on the value of its machines, which are pretty expensive, you can see why people might think that's a tad sharp. But I think the company's defense would be that this valuation reflects more of the value of the offering it's building in a world where Bitcoin is trading a much higher price. So let's have a think about that. So Binance has no debt. It's generating a decent profit margin. It's deploying an increasing number of machines across a growing number of territories, and it's adding Bitcoin to its treasury. So, and that's at today's Bitcoin price of around 100K. If Bitcoin were to triple, quadruple, or even beyond that, which many, including the company, think it will, those profit margins are going to increase significantly. That's going to enable the company to grow its mining fleet at an increasingly rapid rate. And it's going to increase the size of its Bitcoin treasury. And that Bitcoin treasury itself is going to be more valuable. So, you consider that, and that 50 million is trading at starts to look more justifiable. And, if Bitcoin and the company's operations scale up enough, it could actually start to look quite cheap. And that's where the potential, I think, could lie in investing in Binance today.
Okay, so is it more like if someone wants exposure to Bitcoin without buying Bitcoin itself, maybe through a company?
Yeah, absolutely. So you think about it, when you buy Bitcoin, say you buy one Bitcoin, well, well, all right, just say one Bitcoin. That's probably certainly out of my price range, but
Sure.
You're exposed only to the growth in the Bitcoin price. I think what's interesting is when you buy a miner like Vinanz, you're obviously exposed to the growth in the Bitcoin price, but you're also exposed to the growth in Vinanz's mining capabilities. So it's you're getting that price upside and that like total number of Bitcoin upside as well. So I think that's an interesting way of looking at it. But of course, this argument falls apart if you don't believe Bitcoin's going to rise in value. What I would say is there is a lot of compelling evidence to say it will. Most listeners, will be familiar with these as they're discussed ad nauseum everywhere you look at the moment. But just to summarize, analysts think Bitcoin stands to be driven forward by its integration into mainstream finance. We're seeing a lot more spot ETFs and institutional adoption, and many think we will under Trump, who, given that he's looking to establish the US as, in his words, the digital asset capital of the world. And then we've also got those persistent inflationary pressures and monetary policy uncertainty, which is spurring interest in Bitcoin as a store of value. So I think if you think that's going to increase the price of Bitcoin and you want to invest in something scalable rather than investing in Bitcoin yourself, then Vinanz is an interesting option. It's mining at decent margins, it's reinvesting that into growth. Cycle continues as Bitcoin continues to rise and company continues to grow. And it could be an interesting way of playing the sector.
Yeah, indeed it could. And I think David has just spoken really at length about the strategy here, which is really just to mine Bitcoin, and almost build a strategic reserve, really, with as lower overheads as possible and fixed costs as possible as you can keep it. So they're just going to keep doing what they're doing effectively, getting more miners in, getting contracts in place and mining that Bitcoin and building that reserve. Is it
Absolutely.
MicroStrategy, of course, which is Michael Saylor, isn't it? They just buy Bitcoin, I think, don't they? They don't mine it.
Yeah, that's right. And interestingly, Michael Saylor actually named Vinanz as one of his top 20
I
Bitcoin
saw that,
miners.
Yeah.
Which is good. Good for the company's exposure.
Yeah, indeed. And we know how sort of, crazy valuations can get in this crypto world. And yeah, depending on what Mr. Trump does indeed announce next week, it's certainly, I think the least it's going to be is a softer environment for regulation on crypto. And at the best scenario, maybe the United States will even start purchasing some. I saw rumors of that. So
yeah, exactly. And with all that speculation, you got Vinanz going onto a larger market, getting promoted by Michael Saylor. There's a bit of a speculative play there as well, isn't there? Like you say, valuations can get high. And this is a company that's sort of really increasing its reach right now.
Indeed.
It'd be good to see where it goes.
Well, yeah, and I just think now that they're on that main market, they've also got, of course, their North American listing through the OTC markets. Then, let's see what happens. The liquidity is certainly increased anyway at the moment. So now it's just about watching what happens, following wind in the course of crypto space, and I think Vinanz could do pretty well. But thank you, Dan, for that. That's a good little summary.
No problem at all, Mark.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.